And I'm joined by my co-host Trip, better known as Crypto ISO on Crypto Twitter. We got an awesome episode for you guys today, with lots to talk about, lots to get into. But before I get started, would you please do me a favor, smash that like button, make us look good for the YouTube algo. Also want to take a quick second to thank our sponsor Phemex, one of the only non-KYC derivatives exchanges left in crypto. Click the link in the description below to get up to $6,000 in sign-up bonus. Now, the last thing I'll say before we get started here on Tools of the Trade, we are not financial advisors, and this information is for educational purposes only. Welcome to another episode of Tools of the Trade. I'm Zoran Cole, and I'm joined by my co-host Trip. How we doing, brother?
Good. I am surviving the arena. It was a good start to the week with that one. No shortage of entertainment in crypto land. I mean, those are like once a year type things that we see, and then watching people react to that, and like OI being wiped like drastically off the map, and then watching people, what do I do now?
Right? Cope the entire way back to me. Yeah.
There were some signs. We never know what's going to be the driver. The Cointelegraph intern throwing that out Monday morning.
That's a cheeky 2 mil trade for what, 30 seconds of work?
Yeah, right. Or who knows? I mean, people could have been accumulating that for a while and just been sitting on it. I mean, I think the guest we have today is awesome just because of how relevant his data analysis is for what really occurs in the market behind the scenes on different exchanges in the tape, looking at like perp positioning versus spot positioning. And when we had him on before, it's like a master class. Coincides kind of well with liquidity theory, but is even more granular to understand he's keying in on certain market participants or groups of people positioning around the majors. So excited to hear what Skew has to say.
Yeah, so again, without no further introduction, our main man, 52 Skew. How's it going, brother?
Hey guys, it's going pretty good. I think this will be a pretty fun stream.
Yeah, round two. Was it like a couple months ago you were on? I feel like he was maybe one of the early guests.
Yeah, he was, I think, back in the beginning of the year, actually, one of our first guests.
Time flies. Yeah.
Yeah, it was beginning of the year. I think it was like February, maybe March.
February, right?
Something
Yeah.
Yeah, it was because after the market completely shifted into like a new like quarterly phase, or we actually had some kind of like cash, sloshing around in the market. So like volatility was
good. There.
Yeah.
Compared to now, again, I guess let's preface the conversation here. Last time you were on, the market was actually pretty volatile. We're going into the start of a really nice uptrend. Things were moving nicely. Where do you compare the volatility of Q1 of this year to now Q4?
I kind of see them similar in ways of like looking at the market. So you had obviously the yearly open was big, right? We moved right off the yearly open, which is kind of rare statistically, because you typically retest the yearly open, but we didn't, right? This caught a lot of people offside, as well as we had the psychological price of 20K, right? That was huge for a lot of people, so people FOMO'd back in, right? Exactly. Now we have a similar situation. We saw very similar stuff, except I think opposite reaction. So yesterday we tested 30K, right? And pretty sure quite a lot of people were FOMOing in. And it's very similar to Q1 in terms of that psychological price, right?
Yep.
But now we have the opposite reaction, right? We're rejected right off of 30K. So I think that's kind of important.
No, that is actually. And it's almost like a mirror, right? Of like where Q1 started bullish. Now it's like Q4 has this interesting start. Is it going to be highly volatile in the same way Q1 was, just in reverse? Remains to be seen, right?
Yeah, I agree. I think it's going to be volatile, and that's mainly because we have a lot of factors currently that will move bigger markets. So like money markets, FX, debt market, which is treasuries, notes, bonds. Those are going to be extremely important, I think, especially the long end, because obviously the higher long end yields are. That's like the 10-year, 20-year, and 30-year. That impacts cash markets, banks, very wealthy investors and their funds. And I think in the past fortnight, we've seen more large money capitulating from risk markets to equities and going into treasuries. And this obviously lifted gold to a degree, because they have to be somewhat protective of their cash liquidly.
Yep.
And potentially that can impact BTC's performance, right? But cyclically to 2019, right? The moment the Fed starts to reiterate something about pivoting, right, and like lower inflation, we've sort of seen, not really, not to confirm, but we've seen like a less hawkish Fed,
Yeah.
compared to ECB, which is more hawkish at the moment, which is interesting. So, keep an eye on Powell's speech on Thursday.
Yeah. So if you think if it's
Um,
another pause, do you think that there's an indication of like, okay, we're probably probably done? Or how many pauses do you think?
yeah. I think this speech will be like pivotal
Yeah.
in terms of how the market prices the Fed swaps in November. So like, if you're going to hike or pause, right? And I think currently, as we speak, it's like 80% for pause, right? Market
Yeah.
expects that, which is also why the long end yields will go higher, right? Because there's still sticky inflation in the system. So when you have a Fed that pauses somewhat early, when combating inflation, you get higher long end yield, right? So it's like a protective manner for big market participants like funds to then go and pile into treasuries. But then you also have the other side of it, which is people unloading treasuries, so yields go higher and higher.
Yeah.
So conversation goes on and on.
No, I
But
like
at
the
the
macro
moment,
backdrop though. That's kind of important because
yes,
again, crypto is cyclical, but it does operate in what we'd like it to be is a vacuum, but it does kind of take note from a lot of the macro markets you mentioned, and having a lot of these things coming up order, like you said, lends itself to volatility. So as traders, that's kind of what we look and thrive on is the volatility itself. Up or down, it shouldn't matter for most. But yeah, I'd love to kind of hear your take now on what you've been looking at in on the BTC side of things. You can maybe do like a high level overview, and then let's get like really nitty gritty and see talk about like this move, this squeeze 30 with this Cointelegraph thing, and kind of how do you see the market positioning from there?
well, I think we've seen the aftermath now that the market was actually very much short, and we can see that from just using like OI, which is kind of crazy. I mean, you can just see like the further back you go, especially in Binance, the market was continuing to get more and more short, and you can literally just see it from here. You see how OI just keeps
Oh wow,
increasing?
yep.
Yeah, price is going down, right? But OI keeps going up. And then it kind of
Yep.
flatlined at the space, right? Then price went up too quickly, and you get what is very common, and that is short covering, right? So shorts are in a tricky position of, do we hold or
Yep.
do we cut, right? And depending on your RR system, most will cut. That's exactly what you saw. You saw the
Not by
initial cutting.
choice.
Yeah.
Probably
Yeah.
not by choice either.
Oh no, yeah, hell no, it's not my choice. It's,
Yeah.
do you
No.
want to get liquidated?
Yeah.
All right, so then you saw essentially the mass liquidation event here, right?
Yep.
In this candle, which is kind of nuts, but this is probably the highest I think the perp delta has reached in terms of like BTC pricing. So it's 21,000 Bitcoin, right?
Oh
In
wow.
one candle, just from the perp market alone. Like
Jeez.
that amount of margin shifting in a market's huge. That's where you get the real volatility, right? Obviously we went to 30K from that.
Yep.
Yeah, there is something I want to show here, which is kind of important. It's
Was
what I
there
use.
a numerical value on the time frame you were looking at for Binance OI rising, which was shorts just continually trying to bet against it? Like, what was the I guess like because you know how in the past people have looked at open interest levels of like certain numbers, like 1 billion or 10 billion. I don't know what it was. Like, was there?
Like where did it peak out at?
Oh,
Because it
like
kind of flat
a
lines.
numerical value.
Yeah, flat lines.
Usually it's around 100,000. So
Okay.
100K. And I use so if you look
100,000
here, the
Bitcoin?
measurement is coins.
Yeah,
So
BTC.
yeah, it's priced in BTC. It's the like
Got
old school way. You can do it in dollars, but I find the values are not the same.
Too fluctuative, right? Yeah.
Yeah, and that's because the change of price. So
Yep.
the change in margin and other factors.
You kind of
mess
like
with
level out the
calculation.
indicator by doing it in coin terms because, like, regardless, one BTC is one BTC, guys. Come on, we all know this.
Exactly.
Coming from
Exactly.
backseat. Okay.
Right.
Yeah, I was just curious, like, you know, because the historical stuff of that nature is sometimes relevant when looking at these. Because look, price was consolidating for a decent amount of time. Like, whether it wasn't like going like it was kind of like ranging, but very slowly down.
Yeah.
So
Yeah.
yeah.
And you never actually broke structure. See, you had,
Right.
in my opinion, like a lot of scalpers will know this right here is the perfect like trap.
Yep.
And you continue to see. You can also the way I read OI, especially to see which side of the book is getting AP or not, is directly looking at the perp delta because you can see, like here for example, you can see OI moved up, right? But you can see perp delta getting more negative, which means there's more and more sells. Actual shorts opening.
Opening. Yeah. Okay, interesting.
Yes.
That's like a different way of, I mean, not different, but it's like a more sophisticated way of actually like analyzing the OI change, right? Like it doesn't matter if it's up or down, but you're trying to determine is it like net selling, net or net buying that's affecting the OI change, right? Because like it's going to cancel out.
You want to see which side has the higher high percentage aggression. Good word there. That's definitely part of it, and you really want to see who has the most volume in each candle. A way to break that down is just using delta.
Makes sense.
And you're primarily looking at spot versus perp, right? If spot is the aggressor, then they're going to be usually the ones that are dominant and pushing price further or sustained, I guess you could call it.
No, that's exactly what we saw here. Like the entire run up was done by spot.
Perps.
We know a lot of it was T-whopping. Like this here, we could see that there actually was a limit seller, right? They were selling aggressively into the Coinbase buy, right? But it didn't stop the rest of the market from flipping to becoming bid, right? And this obviously forces them to become buyers themselves, right? Then obviously when you have a very short market, you get a gigantic short squeeze, which was this.
Yeah.
And if you look at this, it's a little index called the premium index, right? So it basically compares spot prices to perp prices, right?
Yep.
And this is important because when you get huge premium, and if you look on the left, you can see premium index and the value, right? It's 198. So around the top, it would have been at least $200 higher on perps than spot, which is obviously not sustainable in any way. And then all the very smart players will start shorting it because that's a free $200 like
ARB essentially.
ARB basically, yeah.
Yeah, and it's indirect. It's just directly off sides. It could show up in the funding rates too. When the perp gets that far ahead of the mark price.
Well, like in a split second, I feel like the funding won't change, right? The predicted funding won't change as quickly as like the perp price itself, or the spot and perp difference, I should say.
Yeah.
Yes. The pricing difference is far more high frequency than funding rate because the funding rate will change after 15 minutes, which is when OI is technically like net reported. But you can see, the like OI just here, like shifted massively in the squeeze. So you basically went from briefly negative. This is not like that sufficient, but it shows like the time period before. So basically the grind up, everyone was trying to short the shit out of it, especially this candle right here. And then you get the big pop, and that's what short's getting, wrecked.
Loan, yeah.
But funding is still negative, so everyone's still getting filled on shorts. This becomes a huge catalyst for volatility.
Yeah.
And then obviously you get the huge wick. And then funding jumped to quite a bit positive very quickly. And this is just like within the 1 hour. It's a nice rough calculation. Yeah, I mean, I can change it to like the regular 8 hours. It's basically the same.
Yeah.
But
it's nicer to have that granular way to see the hourly rate.
Yeah. I choose the hourly because when you get huge fluctuations in OI, it can tell you which side of the market's crowded.
Yep.
That makes sense. I like that.
Yeah, it's pretty convenient actually. Right, so yeah, we got the $200 plus premium for perps. Spot starts to sell into it pretty aggressively. We can go in the 1 minute and see that as well.
So, which exchange venues is this across, or is it aggregated?
Aggregated. So it has Binance, Phemex, BitMEX, Bitstamp, Bybit, Coinbase, Deribit, Huobi, OKX.
And then, do you ever just like dial in to see like maybe there's an aggressor more so on like Coinbase or Binance? Like,
yeah, I have this one. It's basically a tape built tool that I use occasionally. And it's pretty cool. So I have like at the very top, it's called CTD, which is basically cumulative trade delta. So like the amount of orders executed in one candle. It can be very useful for spotting tops. And you can see here on this top, there was like a ridiculous 190,000 buy orders around like 30K. And it continued to go up. And you can see orders? Yeah. So in 5 minutes, there was like basically 200K buy orders being executed. Is that not like fucking crazy?
That's definitely a good indication of tops.
I
assume the reverse for sells as well. It's like a capitulation from an algo essentially, or a bunch of algos firing at the same time.
Yeah, correct. Yeah, that's where you get into the real nitty gritty of auction theory, right?
Yep.
Who wins the auction?
That makes sense.
Kind of thing. Yeah, no. So for your question, this is like a more like exchange versus exchange perspective, and you also have the tape here, which is nice because obviously with like CVDs, it's just the taker side.
Yeah.
Directionally, CVDs are impacted by limit. So whenever you have a big limit by a CVD, it'll go down. And that can be verified by tape, right?
Okay, that makes sense.
Yeah. So like here, I'll split it up into like the main. So like the main three I usually look at, currently at least, is Bybit Spot. They've been the aggressor for about a month now.
Bybit Spot, that's interesting. You think that's since the KYC rollout? That's the only thing that would make sense why they'd be aggressive on the spot side.
Yeah, it's kind of interesting. So us like old school, Bitcoin traders, we are kind of like anti KYC, at least initially, thinking it would remove liquidity like it did in the past.
Yep.
Like how KYC, wrecked BitMEX, at least initially.
Yeah, exactly.
Yeah. Even though obviously Binance was KYC'd by then, right?
Yep.
So
I love how Phemex is like not as relevant when that was like a huge exchange you had to watch.
Yeah. I mean, the same with like the end of their era. They were good. They were huge up until like 2016, 2017. Then BitMEX really like started outshining. It's just kind of like the replacement. Then Binance took over. There's always like a king that falls, essentially. At least that's my understanding over the past several cycles.
Yeah, I agree. Even Kraken was big in like early 2019.
Yeah. Yes.
I mean, Bitstamp was. That's when I saw that something about, there was a data point about Bitstamp like other week or something. They're like large volume in Bitstamp. And that was always like, oh, that's where the OG Bitcoin spot whales would like move. I always see Ripple moving out of Bitstamp.
True.
That's kind of funny.
Yeah.
So Bybit's been more aggressive on the spot side, and that you think that's like a part of the fact that the KYC, and like you're mentioning, Binance was KYC before, so it's not really silencing the liquidity; it's actually helping. I'm guessing spot liquidity.
Yeah, so it's like a non-event basically.
Okay.
We've definitely seen like a lot of volume has gone to Bybit quite recently too. You can just see it from the price action. Like the most active exchange on spot has been Bybit
Oh
before.
wow, that's impressive actually.
Yeah. And
More so
sort
than
of same
Coinbase
with,
too. That's also pretty impressive.
yeah, they've been doing like quite a lot of quite decent volume. I don't think as much as Coinbase in terms of their institutional side, because
Yeah,
their,
yeah,
their
I figured
institutional
that.
side's like freaking huge.
Yeah, but just the
Um,
retail spot side, that's still pretty impressive.
yeah, it is.
It could also, I mean, they're not under the microscope as much as Binance, right? So any big players who are moving spot on Binance could just go to Bybit too. Or it's
Yeah, that's what we've seen.
Justin Sun
Since
is
like
just moving his coins there or something.
Okay, so we saw what happened with the blowout wick. There's some really interesting data points and kind of like spotting the actual top. So since that top that we put in, or that squeeze that we put in, what have you seen on the tape that leads you to believe price is going to go one way or another? What's like the tape saying, so to speak?
so far it's been mainly spot selling, which is the opposite to the grind up.
Yep.
I've seen a lot of limit buying from Deribit, like consistently for the past like week. You can see it here even. So that's directly correlated to probably dealers,
Okay.
which
Like hedging.
means which means there's probably large put open interest at the moment, and that they're most likely underwater where they are currently. So this means obviously you have to insinuate that there's going to be more hedging on the perps than there has been. So more Deribit longs, which can be important later because if there's a significant dump,
They have
then
to unwind. Yeah.
Do you
you
know
could
like
see
where
Deribit leading.
a lot of the buying the limit buying was occurring?
From spot or perpetuals?
Probably
Whatever you just noted around Deribit.
Um, oh, like where they were buying around about the price.
Yeah.
26.8, I believe. I noted that for I think like the whole of last week. It was a very important price.
That's the monthly open.
Yeah, around about. Yeah.
Yeah. That's where we like literally went like that's where like we held the 50-day moving average 26.6. We started trading there and then it went bam. Just ripped up from there basically when you traded through it.
Yep.
Yeah. And actually there was a persistent iceberg buyer. So iceberg buyer is basically just a big player.
Yeah.
Who'll go and start spamming a bunch of limit orders, bid side, for when the market was trying to puke around 26.8, 26.7. The dude was just consistently filling his bids there, right? And then eventually we moved higher, right? That was, potentially the entire lead. They were the buyer that drove this entire thing, potentially.
Man.
So, do we think that they're going to unwind, or I guess how important? Actually, let me flip that. How important do we see? Like, you said there's a large put open interest right now. How often do we see call or put or option, just general option open interest help? I guess cement or signify tops or bottoms in respect like a larger high time frame shift in trend.
Usually by measuring that, it's the amount of delta or gamma purchased, I think.
Can you give us a little explain like I'm a 5-year-old on both those terms in like in any sense of the way, or like how at least you're reading them to like determine it?
So if I was to determine which side is more favored, like calls or puts, and that's typically defined by the amount of premium paid for them, and you can usually see that by a higher delta, right? It's like for example here, the amount of volume, which is also important, of calls was 14,000 coins, and that was in this candle here.
Interesting.
Yes, but yeah, obviously we can't tell from this if that was calls rolling
If they're
over.
or if
I
they
mean,
were
puts
buying or
rolling
selling.
over. Yeah, like that's what I mean. We
Yeah.
can't tell from just this. I'd have to go and get like other option books. I mean, I think I have this one.
I mean, if people are buying calls in that wick, well then they're in for a rude awakening potentially.
Yep. Good point.
Yes, especially if they're paying a big premium for it, it can be kind of important. I use this tool occasionally. So it's basically the premium for like options,
Okay.
right? And whenever it's above, yeah, it's like here. Usually you get volatility selling. So this is looking basically at the day range of a week,
Mhm.
and then the data history of a month. So since like the 15th, there would have been people trying to sell vol, and obviously above 0 is where like it should work out. But if you have like a regime shift in the market, it won't.
Okay. Interesting.
Yeah. Historical volatility is about where I would expect it, to be honest, around the 30s.
Have you looked at or compared the volatility, like in terms of these measurements, from Q1 compared to now? I'm assuming they're like relatively similar then.
I think actually the historical volatility was higher.
Back in Q1.
Yeah, I can check on this, I think.
I mean, the B-vol chart's kind of just been down only though for a while.
Yeah, no, it has been. You're right. So like here was about
What
January.
was that? January? Yeah.
Yeah, so the same, about 42. And
Interesting.
then yeah, it went up to like 70, which is a big move. That probably would have been the Chad candles that went straight
Yeah.
up.
Yep.
Right. We had a same relative move here, and that
Yeah, that's why I'm
was
noting
from
it's pretty interesting. That it almost looks like the market maker sell model, pumping Q1, distributing Q2, Q3, and then potentially marking down Q4. So it's interesting to note where the volatility is now compared to where it was back in Q1. Seeing if we get that basically inverse of the market maker model.
Yeah, I actually agree with that. Gamma traded dollar terms. Yeah. Okay, that's
huge.
I'll make it 12 hours so we can see more.
That's usually how you mark tops.
That's what I'd
Yeah.
assume. No. So yeah,
Dude.
I'm actually super bearish on the stream, by the way, guys. I don't know how much Skew's given, but from just like the low time frame look, but like high time frame, I think we're putting in a very high time frame top, and that's why it was interesting to ask about the options flow and open interest to see what the rest of the market's kind of thinking in terms of positioning.
Right. This is the highest gamma traded per dollar, so that's basically the premium for calls.
Okay.
I think we've seen
premium for calls. Interesting.
Yes, the premium you pay for calls since the November crash. And then
Wow.
what's interesting is on the November crash, it was puts. So
okay, yeah, completely. Obviously the dealers make money, right? Does that confirm a top right there then in that respect, or help suggest that there's a very high time frame top being put in?
It definitely helps. That is a lot of gamma for a lot of calls. It's not even like that much compared to previous times, like August. And then the March calls were pretty up there.
Wow. Okay, so we have a decent case for high time frame top. Why don't we pivot now because we're talking about this? Can you give us a little more high time frame overview how you're seeing things? So you mentioned there's a bunch of spot selling, limit buying. How are you seeing the market on a higher time frame?
For higher time frame, I usually just use my like main EMAs, like the 50 week EMA is pretty good, and then the 200, and then I use the dailies. So I'll just remove the 4 hour for now, since I mainly use that for 4 hour, 12 hour, 1 day type
Yeah.
picture. I mean, this is ETH. Might as well just go with it. But ETH looks like ass, obviously.
Yep.
Like each low we rejected here. Same, failed to hold it. Now we're retesting this area. This is basically the last area you want to see for bias to step in and do something.
Yep.
All right.
Yeah,
Which
the
they
ETH
should.
long was really interesting to me because it ran the previous month low. I mean, I was long ETH. I did the 1530 trade, and I wanted to trade the previous week high. So we got 1640 basically. Very rare does it work out that way. Thanks, Cointelegraph. But if you go below the previous month low that you just took out and reclaimed into like the weekly high that they took out, like there was like a diagonal you could draw. I mean, I'll show you, but it was so clear that was like the resistance, and now being back down here, look at the lows that are so easy to take out. That's how you get 1480 now on ETH or 1460, right? They just engineered liquidity from above that we had identified on a heat map, like from on the 7-day or the monthly. It's like, well, why is this shit going to go up? That's why I don't understand why people think there's no fuel for this to go up right now. They just fueled the whole thing in one candle and trapped a bunch of people. You can chop around though for a while, and you might not go down immediately, but like ETH does look horrible compared to Bitcoin.
I can verify that actually. Usually for liquidity, you need a large open interest, especially for these massive moves, right? So look at ETH.
There was more shorts on ETH over the weekend than there were on Bitcoin. That's why it looked better.
That's true. ETH has been underperforming quite significantly for some time.
Yeah.
It looks like during this mostly was shorts here, like basically compounding a position, expecting, here to be like a small bounce and rug. But obviously it's never like that, and they probably all got wrecked here.
Oh, they got wrecked.
But
the peak there,
surprisingly, it's still really high compared to BTC.
So could you think we can still get a cascade effect given the OI?
It really would depend on like the overall positioning of the past like few days here. So obviously we can see this is all shorts getting wrecked.
Yep.
And matching here with the OI expanding up, more OI, more positions opening. I can see these are longs here, and then basically sideways chop. Then the puke
Longs
here
closing.
is longs. More longs. That was more or less like a stop loss run. All the stops were probably here, and then it puked.
Yeah.
You'd probably want to see, if you want to be like really short into a massive squeeze of the longs, you'd want to see more and more longs being added onto the market from Monday till Friday.
Like after puking.
Yeah, exactly. You want to see longs chasing the dip, especially if you're short and spot is selling it, right?
Yep.
Yeah. I just think you can get like more than a couple days of chopping around this stuff before you get like a serious impulse down. Because you got to build up all those positions again, which is what I'm waiting for to short.
I mean, like, given the low time structure, you had a nice like up only trend basically. And then the big candle, now you have the opposite, and technically this wick would have stopped every single long in this area.
Yeah, but you didn't see that in the OI, right?
No, which tells you ETH is probably still being shorted.
being short.
Interesting. Yeah, the market's probably net short on ETH, in my opinion.
Yeah, no, I agree with that. I think BTC is a better short given where ETH BTC is in general, historically speaking. I know ETH's just been hammered so far down lately that I feel like it makes more sense that BTC is a better short. And it just seems, especially just from the call options, right? And the open interest there, the expression through that, it makes more sense that BTC would be putting in a higher time frame top. Alts and ETH may not, dump as fast or as quickly because they did get a heavy beating over the summer until that Ripple news came out, if I remember correctly.
Oh
Yeah,
yeah,
that's true. They've been bleeding like quite
yeah. So if you
against
look at
Bitcoin.
Hyblock right now, the delta flipped from I don't know. There's just 780 million in longs on
You
ETH,
want to
and
show a trip?
there's 700 in shorts, right? So like the difference in, can you see this?
Yep.
Yeah.
So the difference earlier today, I think this was like 1.5 billion, right? Now you flipped red here, but if you go to Bitcoin, I think you're still
Green.
a lot longer, which is why I agree with
Yeah.
your idea, Zorn. But I think there's still a significant amount of longs in BTC. Just looking at the delta. Yeah, look at this, dude. See,
Yeah.
this is
So
why
what,
like
7 bill?
7.6 billion. Like, so maybe if ETH does squeeze, you do get a reactionary move from Bitcoin. Maybe it doesn't lead it. Maybe you get, I don't know. Maybe you get one of these up here or something. It's not, I'm not like fully ready to
Sold on the
position
idea.
around it, but I do think that Bitcoin, based on everything we just talked about and the stuff that we look at, especially just from like a chart standpoint, well, like look at this. I don't know if can you guys see this?
Yep.
Yep.
Yeah. You could, this is a 12-hour. So problem is with every TD is going to be, the 6 is way too above the 9. So it's not really the best. So we'll turn that off. But you could put in like, a distributive thing up here for like a couple more days, in my opinion. Maybe that gives ETH a chance to move up a little bit, take out some of those shorts. But I don't think Bitcoin's going to do anything crazy based on 7.5, 6, it's like 7.5 billion in longs on the cumulative lick delta.
Yeah, and
Right.
28.4, 28.5 has always just been an important resistance level, or just even support level, in different, throughout the past, Q3, Q2. So it would not surprise me that, that ends up being a big level, and that's why I think that's almost like a good level to short because of its level of importance. I'm talking about swing shorts, of course, but yeah, continue.
Yeah, so you had a 3-day chart? Like, I'm just looking at the daily chart because this is interesting to me because we hit the top band. We almost basically retested like the whole breakdown. But if we look at, was the G candle the one that went to 10.4?
Yes, exactly.
Okay, so wow, going back in time over here.
Good times, 2019.
Which
For
it
those who don't
was,
know, the Xi candle was like President Xi of China basically, approved Bitcoin for like the
it was
X
this
time.
one. It was this candle right
Yep.
here.
It's
Yeah.
very similar. Yeah.
You traded above the 200 and like this was 26, 20. Oh my God, dude. It was the end of October too.
Yeah, it's the resemblance is uncanny, right? History doesn't repeat, but it often rhymes.
Yeah, you sat there like 4 or 5 days maybe. And then once you
Yep.
broke below the 200-day moving average, then that's where it really started going. So I would look at a similar instance to that because you probably want to build up more longs up here is my guess, even though there are some already. And then maybe if you lose the 200-day moving average decisively on a close, that's what, 28K essentially. You might be able to get a tighter risk on the trade. But I guess shorting here and your stops here, Zorn, like in your
Yep.
target 23.6 or 18K.
20 both. Well, probably T1 would be 23.6 and then T2 would be 18K. Basically, I try to get as close to the yearly open, because that's the capitulation level effect I want to see across the board. Here, let me actually show you guys what I'm looking at.
So I guess if you just took the range, let's just say your range high is, I mean, it's basically like 28.5, 28.3 to 28.5.
Yep.
If you're going to start trading below that, then your range low target is taking out 25K. And that's going to get you your 23.6, which is like the liquidity we've discussed for months now. That's how I would look at a Bitcoin trade with like a range deviation on both sides. We just
Oh, wow.
deviated.
I'm going to show you guys something actually very interesting. Okay, so we talked about, right, the she candle. And 2019, from top to bottom, the she retraced 39% before we had our little, end of the year rally, Santa rally, and then obviously COVID happened, the COVID dump. But let's like exclude the COVID dump and just talk about the she candle, which was the week of October, 21st of October, that week in 2019. And from top to bottom of 10.5K to the bottom of, what was it, 6.4K, 39% drawdown. The top of this move at 30K to where I'm looking at your yearly open 18s. That's literally a 39% move. So it's very similar in price perspective. And then just looking at this from an Ichimoku point of view, we've talked about this edge hedge ad nauseum. Price wasn't able to hold in the cloud, fell out of the cloud, kind of drifted its way in. People are saying the edge hedge setup is 40 to 42K is there. I disagree, and again, it's because of one simple thing, right? So you do have the TK crossover, you do have price inside of the cloud. The only thing that you're missing, and I mentioned why, is that this Chiku span, this nice little lagging span line, is actually inside price right now. So price plotted 30 weeks ago is still inside that previous range at that 28K level. And if you remember, I mentioned that 28.4, 25 being a very key level, and we see that here as well. I think it was actually the range high of that first pump candle right here. 28, 478. So yeah, this 28.4, 25 level is very key. The fact that we have the Chiku span inside of price is why I don't believe this edge to edge to 42 plays out. I think it's much more likely price is actually going to fall through the cloud. So the weekly open right now is 27,180. It's basically a flat bottom with the weekly low. Today's Tuesday. It's been 2 days of the new week. We had a giant squeeze to run the weekly open before the weekly closes, and turn this weekly candle red would not surprise me. And I think the first stop would be 23.6, like we mentioned, and then from there we get back to those lower targets. But yeah, that's kind of the interesting thing about the BTC chart there. Skew, can you show those MAs again that you were looking at earlier, and how they kind of line up with some of the stuff we just mentioned?
Sure. So the pink one here under price is 200 week MA. We all know how significant that is on a high time frame perspective.
Yeah.
Then the two blue under, that is the 200 MA, then the 100 MA, daily MA, of course. Then you have the other daily MAs under price here. So like technically on a 1 day perspective, trend wise, this is price is trying to secure an uptrend here. And then obviously we have 1 week supply in the current zone, and that's marked from the previous swing high that we had before, the swing low into 1 week demand, like the previous 1 week demand. And, obviously high time frame MAs, it's just clean AF. Then we had, obviously the retest here didn't break down. So then price had to move up. Now we have the next or new current 1 week demand around 26.8 to 26.6.
Okay.
That'll be very important. I think, for like your scenario, right? We break down from here and we lose these high time frame MAs again. That's going to be like very obviously bearish.
Yeah.
And then the next price resolution would be around here, right? And probability would be to break it. And if you break that, then I highly doubt
this hold for the 75th time.
Yeah, right.
Yeah, well, you'd be breaking market structure most likely, because that's your swing low, obviously, right there.
Correct.
26.
Correct. Yeah, you would break market structure below here.
Yeah. Yeah.
So,
And
yeah, we
so
had the low, high, low, technically high, high, but not really. And now we have this huge wick, right? So this is technically not a higher high yet, right? But if we get a continued 4-hour
Closed.
closes
Yeah.
higher, it's going to appear to be like the market's trying to move up, right? And this could be just to fill out this week, at least partially.
Yep.
And yeah, if we want to look at that as well, then we have like obviously some fairly important levels to watch. The first one would be here, and then I would probably mark this one here because it was the
those were the
like
low
trap
before the
setup here.
breakdown.
Yeah.
Yeah.
Yeah, so we can see it lines up very nice. So this kind of general area would be where Zoran was looking to short, and
Yep.
I agree it would be a great setup, especially if you have the right confluence, which is it's not supported by the spot market. That's like the first risk factor, and then the second is it's longs that are chasing it, right? So then you get that build up in OI, which you need for an impulse law. For now, I think it's a bit early in the week for that. However, if I was going to short, it would be below.
Those key MAs,
Actually,
basically.
You could
yes.
lose the 200 and put it above 20, whatever that line is, because then you've lost 28.7, is it? 28.8?
Something like that, yeah. But I have these levels currently. I posted a chart, right? So basically above here you have the buy side liquidity, I believe, and then the sell side liquidity below the initial base for the squeeze, which is textually important.
Yep.
And then you obviously have this nice like trend on the lower time frame for now.
Yeah, we can play in that whole zone for a while. That's the thing.
Exactly, yeah. But
volatility removes volatility, right, until it builds up again, and then lack of volatility begets volatility.
Yeah, right. You build up a balance in a nice range, and then the expansion comes from a confirmed break of that balance. Yep. So like like a break above here, right, or below
break below there
here. Yep.
Yeah.
But I think you're probably going to see a chop here, and then you could see some move down. It breaks these. You're going to move up. And then that would be like your short towards liquidity here, which I think lines up as well with the week open and the monthly open.
27.1, 26.9, right? Yeah.
Yeah. So that would be like another important zone if you get that short.
Yep. Because there will be buyers there. There will be, a buyback of sorts, a response, because of the strength of the move from the weekly open in the last 48 hours.
Yep, true. The buyback will be important if it's spot or just shorts closing. Because if it's shorts closing, it's not going to sustain.
Yep.
That's
another key
probably
factor.
Just the spot selling continue as it's just showing more distribution. If any of the stuff started to pump.
I mean, I was seeing sort of signs of distribution around 28.6 earlier. And you can see it in the price action compared to the CVD, the spot.
Means you probably shorted
like the spot one.
Yeah.
Around this areas, you see? And you can see the decline in spot CVD. And obviously it's going sideways, right? But it's not the same with price. You're not seeing take is actually chasing. You're seeing them selling.
It's diverging essentially, right? Yeah.
Correct. So that divergence is exhaustion of buyers. And it also means you're starting to see actual sellers show up, right? Which is technically important. And you're seeing it again on the same bounce here. It's like the same copy pasta price action. That same level of selling is a form of distribution.
Interesting, yeah. Markets are fractals essentially, in one way or another, right? It's not just your generic meme. Like it looks very similar, so it's going to happen, but you actually see it in the tape, in the actual metrics of the fractal, right? That divergence, the exhaustion from the buyers, essentially.
Yeah, exactly. I use these tools basically to confirm what's going on in the lower time frame, and that obviously front runs the higher time frame closes. So it's important to know why 1 hour is weak. you know, or like why the 4-hour is likely to be like a swing failure or just a liquidity run, like a
Yeah.
liquid.
I like that. Yeah, it makes sense.
So if you looked at this for ETH, would given what we just saw, then it's not people. Is it shorts opening, but spot buying or no?
No, it looks like the market's selling it, to be honest.
Yeah.
Spot, yeah.
Yeah, spot's just selling. Basically, 1600 seems to be the resistance.
All right.
Yeah, it's pretty clean.
Yeah, generally
Yeah,
flat.
this is a long
1600.
QQ.
Yeah. Do you have any theories as to why? I mean, we could talk about ETH BTC, but do you have any theories, Skew, as to like why the market is so why spot is heavily selling ETH? Do you think it's a fundamental reason from, I don't know, post merge stuff, staking stuff, supply overhang? Any thoughts?
To be honest, I don't really know, like narrative wise, why, but besides the cyclical factor, which is, you know, you want to be in Bitcoin, at least, you know, given the
in the
macro,
beginning.
right? You want to be in Bitcoin because of cycle. It looks the exact same to 2019 as me. We can even go back to 2019. Obviously, the prices are going to be different, right?
Oh yeah, I remember those prices very well. 130 to 282, down to 160, up to 317 or some odd like there, and that was the end of the echo pool.
Right. And yeah, I mean the current bleed is like this section of 2019.
Exactly.
So like somewhere,
especially after the upthrust of 2100 that we had. Yeah, that's just very reminiscent of that.
It is, man, and you can see it's quite similar, especially with like losing the trend here.
Yep,
we held it, we've lost it, right? So we're just consolidating here, and then obviously we can get either sideways. That would be the optimistic kind of outlook, would be sideways chop. If you want to be more 2019, you'd have like slow bleed.
Yeah, just continuous break on MS.
Yeah, to like 1200, and then you would probably start to grind back up from 1200.
That is the early open. That is one of the levels I was looking to bid. I think 1200 gets defended. I think if we do dump, like we talked about, ETH BTC will hold up better. So, you know, if we're theorizing BTC goes to 18K, ETH goes to 1200, you know, that's an ETH BTC ratio of about 0.066. So like go back to mid range essentially, which I think is feasible if it holds range low. Because, you know, EPTC has just been this giant downtrend. It's just a matter of time. Yeah, nice. Look at that. That's the 200, right?
What is this?
Yeah. See? So there's very high probability case for a bottom on EPTC.
That's just interesting. It's still puking.
It's at range lows. Let's see a chart of EPTC.
That is interesting.
Are we supposed to buy ETH now in a catch-up trade?
I don't think it's a catch-up trade. I think it's more just along the lines of
it'll just go down slower.
Yeah, so I'll show this, right? So this is my little range I've had for, 500 days, 600 days. But essentially, you know, range low is here at 0.055, and then this is like a little 3-day order block that goes down to 546. That's kind of what we did, essentially. And it doesn't look pretty on the 3-day, but I can see us kind of holding here and then going back up to mid. So, you know, this time period of going back up to mid-range could coincide with BTC and ETH going to those numbers I mentioned. And, you know, ETH BTC bouncing from range low to mid-range would not surprise me whatsoever. Or at least to run these tops, right? And that's like 0.065. We just said 1,200 ETH, 18,000 BTC is about 0.066. So it's in line with that.
Yeah, I agree. I mean, you know, if ETH was to bounce, that would be around the monthly open.
Yes.
And that would also
on the USD pair as well, right? Yeah.
Yes. Yeah. I find this range kind of interesting from, like, what do you think of this? You see the previous
So-
low, right? If you make like a
Yeah,
little
yeah.
range of it, it's basically the mid range with the 200.
Well, that's what I'm saying. It's like the order block of that 3-day range. So yeah, it's essentially like support. That's how I kind of look at it. That all that clustering mid range should hold for a bounce, right? And then it aligns up with like the range low from like 2 years ago, essentially.
That is interesting. Very interesting.
I want to look at a BTC.
Dude, basically want to see a recovery before the daily close then. Because this
To
does
hold
not
that,
look good.
yeah. No. But that's the thing. I think it goes lower. I think ETH BTC can go higher while USD goes lower. But that would just mean BTC is going lower quicker. That's kind of my thesis.
This is where BTC is going.
Okay, yeah, all right. So that's basically saying there's more allocation to Ethereum than
Yes.
Bitcoin during a dump. Interesting.
Because we saw that, time and time again. Yeah, I got you.
See this 3-month heat map on BTC?
Yep.
This is
Yeah, look at all the licks.
right there. But like, look what we just did.
You ran all that monthly liquidity, and now the most
like,
bright
this
yellow is once
this is
again
a
at
gap.
23.
So it's like, even if you drop down to a monthly, looking at like, we just cleared a bunch of topside stuff that like no one thought really was going to happen. Here, ready? 29.3 is like, if you get a move to 29.3 or like 29.6, like that's where liquidity is. Like that's probably how you get a tighter setup off of this into like all of this. This liquidity is just sitting here waiting to get run. And this is the 23.6, like boom, through there. That's where I think price is going. And if you can catch the distributive nature up here on a move down to here, that's your swing, as we've talked about now at nauseum. Where
the breakdown confirmation would be below 26.6 because that would be the break of the 4 hour and then the 1 day structure.
Yeah. Yep. And if we look at ETH 1 month liquidity heat map here, like 1440. I mean, this gets you the 1480 we talked about. We ran some liquidity like people didn't think was going to happen. Like I haven't looked at a 3-month one. And those are the market events that like generate that to where you need to do that before you can like straight up nuke again. Right here, like into this.
Yeah.
Like how are you getting back up to these levels? Like there's just gaps. Like this is clear. 1470. So
then that goes in line with the slow bleed.
If price goes that higher, then it would obviously be long driven.
Yep.
Yeah, which adds more emphasis on running lick lower.
Exactly.
Yeah. We could even just take like the wick on this, and I'll share this, and take the low, and then you pull the fib, and you match up the fib with basically.
You're still on Hyblock. Yeah.
Yeah, sharing it now. See it?
Okay. Yeah.
29.3, and this is your like upper band where you're getting the exhaustion. So like, if you're shorting here with a stop here, targeting 23.6, like.
Yep.
I mean, you could do it here. Don't get me wrong, but
I get it. Yeah, 2 ways to skin a cat in that situation.
That would be like the thing of like filling some of the wick is my guess. So we'll see. But I don't know. Wow, I always learn so much from Skew. It's crazy.
I know.
It
really is a tape masterclass. But to see what we're talking about in Hyblock, and then having Skew confirm that by looking at the metrics between, the aggregated volume deltas, the difference between perps and spot, and then looking at the actual cumulative delta between buys and sells to compare that with open interest, super effective to kind of confirm what we're looking at Hyblock there.
I would say that the options part of it is one of the more interesting things, looking at what we just uncovered in terms of relative levels versus like the beginning of the year and other moves.
Yes,
agree. I didn't even look at the Ethereum options.
Yeah,
I highly doubt it's even as big as BTC's, but There can be.
I'd assume it
can be
wouldn't be
some.
on this move specifically, but yeah.
It looks
Yeah, it's pretty dead, to be honest. The
Yeah.
only difference is you're seeing more gamma, obviously, to the calls as well. But yeah, really low.
I think that's just the
really low
convexity of ETH in
volatility.
general. That's probably why the gamma is high. I'd assume.
Yes. Yeah. You're probably right on that. Another cool thing you can use with Velo is the return by session, which can be pretty important. So, like the past month, we've basically been seeing Euro. So the Europe session's actually leading in terms of like the price action towards the upside, which actually makes sense in terms of like the TradFi divergence which you've had with like equities, and then Euro was also doing pretty good last week.
That makes
where
sense.
every time the US opened up, they sold.
Yeah, I think so. Like legitimately, like that's actually been a funny trade. You can even see it on the Euro, I'm pretty sure. So I'll use 4 hour. I think I have market sessions. Oh, yes, this market session indicator is pretty cool. You can see generally the London session has been the main like mover with TradFi.
London
Oh, wow.
Open, always asleep.
Yeah, you used to stay up for that.
Yeah, then like start a New York mean reversion.
Yeah, dude, it's always go to the
Very
gym.
rarely.
Get long or short during London Open. Close before you go to the gym, or get long actually during London Open. Close before you go to the gym before New York Open, and then trade again once New York session's over.
Yeah, basically, man.
That used to be
You
my
saw the
thing.
exact same here as well.
But yeah,
Kill zones.
Long, close. Like,
Yep.
it's funny how simple it is, actually.
No, but it is. I was talking to this about Nick probably like back in March or April. Like you can literally just short before New York Open and then go to the gym and then close before the end of the market closes, and usually do pretty well. Like some sessions are just bad sessions to begin with. They trade in one direction more often than they don't.
Then Asia, you get like schizo price action.
Yeah, well, yeah,
dude, you do.
You're trying to go to sleep, and it's like, you're like, what is going on over there? Yeah. All right. Well, we're just past an hour. What do we want to do here?
I guess let's take one of these questions that someone asked, and we can kind of wrap up Skew. So someone asked, how are you thinking about ETFs coming in January? Does BTC progress to a risk-off asset over time? Gold went up 300% following the first ETF, I believe, in 2 years. Any thoughts on ETF hype?
I DM'd you like yesterday because I was seeing some discussion on Twitter about if the spot ETF is more of a like supply or demand impact to the market. So it's quite interesting because technically it would be a demand, right? You're basically creating demand. Literally people are buying Bitcoin, right? And then with the spot ETF, it's basically just holding it in a big AUM.
Yep.
Right. So that's actually demand for physical spot Bitcoin. That's important for the market, right? So initially it's going to be a demand effect, right? So whenever it gets approved, right, what we want to see is how much inflow is going into these spot ETFs. That'll be the primary catalyst.
Driver,
if it's
right?
very
Yeah.
weak, you're going to see people give up, I think, on the narrative, right? And that can create an opportunity of itself, something like a COVID dump, maybe. Right? That would basically be the primary opportunity, right? But that being said, if you're seeing more demand, right, for Bitcoin, you're going to see more of a parabolic trend, I think.
Yeah.
And then obviously at the end of that, it's all going to be supply, like 2018, 2019, 2020. You're basically going to see 3 years of supply.
Yep, exactly. You get your vicious pump, and then you distribute for the long road ahead. But I like that analysis. That makes a lot of sense to me. Do you have any thoughts, I guess, just like spitballing on Are they going to approve it before the end of the year? Are they going to do the January approval? Are they going to kick it down the road like they always do, and push to that March approval? I think we're all under the impression that one will get approved. It's just a matter of when, not if. So at that stage, when do you think the actual event happens?
So if we're talking in probability terms, it's probably 80% likely it's going to be January to March period, right? The final deadlines, basically. And then that obviously leaves 20% for November or December. And the outlier here would be, I think, the Grayscale case, right? So they lost against ACC, which is important, right?
Yep.
The court basically told them, you need to provide some actual significant something for us to delay any longer, right? Now they have, a week
essentially
to basically come up with something, right? And I think given the false ETF, like the bullshit ETF thing, that showed how little the market is actually positioned for an ETF currently, right? So that is something to think about, because if you're actually seeing like the market start to position for some reason at like any point, that's going to create a completely new market dynamic. That's new elasticity of demand, right? That's new demand. That shouldn't be faded. We haven't seen that since the huge squeeze yesterday. But if we start to see it, I'll probably be like tweeting about it.
Yep. Okay. That makes sense. I like that.
Just let them distribute first.
Yeah.
I mean, heck, it's just low entries. I definitely want low entries. I'm not bearish, but I want low entries. You know what I'm saying?
Yeah, exactly. I'm not, I have this huge bear thesis, but it's only because I'm waiting for the capitulation to get max long and go fuck off and chill, because I'm good at that. We haven't had that capitulation yet, so I'm really looking for something similar. Again, I'm a bull in bear's clothing as well. The closer we get down to the teens, the more aggressively bullish I get. Right? I think the next dip is the absolute generational buy the dip opportunity. You're not going to get anything better than that after this next one. I don't know when it is, where it is. But I will be able to confirm it with backwardation and other metrics I'm sure you look at as well, Skew. But backwardation is the primary one. So I'm really just looking. It's 9 for 9 in my journal. When I see backwardation, and if I see it at 17, 18K, I'm going to be the loudest motherfucker on Twitter, just beating my chest, max long, full posting for days. Ape season, exactly. It's going to be like that though. But we're not there yet. So I think we're all in the same camp. We're just seeing, is that at the 18s, the 17s, the 23s, just below, it's somewhere. It's just a matter of being patient for it. So we talked about a lot of cool things today. Skew, really appreciate you coming on, man. It's always an absolute pleasure. You put on an absolute masterclass for everyone with the tape, especially the stuff with options. I find that super intriguing. And that kind of confirms my bias on this being a high time frame top. But brother, appreciate you coming on. It's always great.
Yeah, it was fun.
Thanks, man. Always a good time.
Always.
All right, gents. Thanks for tuning in, and we'll catch y'all next week. Captain Cole signing out.
See ya.